Hello, my social media family. This is a long course in the waiting, and I've been trying to put this together for the longest time. So what we're going to be doing today, we're going to be learning the fundamentals of investment. How do we get into the stock market? How do we purchase a stock, right? How do we master our emotions to don't get very crazy when the stock market fluctuates, right? So we're going to be addressing a few things. So with this being the case, it's going to be the first lesson of a series of lessons which is going to cover the following. So what we're going to be going throughout the course of this lesson, these lessons, we're going to look at how you open a brokerage account. Very, very simple, fundamental stuff there. But a lot of people really don't know how you open a brokerage account. The second thing is funding your brokerage account, how you go about doing this. The third thing that I'm going to be teaching throughout the course is researching the fundamentals of a stock. How do you know that this stock is a good stock to buy? How do you know that, hey, spending your money in this stock, your hard-earned money, why is it worth it to spend your money in this stock? How to read the market, very important here. How do you know that this stock is overvalued, undervalued, or it's a good price? It's discounted and it's a good price for you to actually jump in it. Then we're going to address how do you purchase your first stock. Then the sixth thing that we're going to address here is, guys, is mastering your emotions as it relates to investing, because you have to learn how to master your emotions. You can't be over emotional and panic. You cannot panic. If you panic, you're going to pounce, and if you panic, you're going to be in a crazy situation where you may lose your money. So you want to be sensible and never ever panic. If you know how to research your stock, do your fundamentals and check for your basics. And then last but not least, we're going to look at order types. How do you buy the stock? How do you sell the stock? How do you make sure that you don't miss out on your profit? How do you secure your profit given the situation? Alright, so what we're going to do now, this lesson, my first lesson here, is intended to be a fundamental lesson to get you motivated on why you should do this. Why should you do this? Alright, let's hit this. Now, before we started, I like this little quote here that I saw somewhere. Not sure where I saw this, but I think this was so beautiful. There's a self-confidence is the most attractive personality trait someone can possess. How can anyone see how great you are if you can't see it in yourself? Whatever you will achieve in this life, right, you have to see it within your reach. You have to think great about yourself before anybody can think great about you. Just remember that. So how do you see yourself is normally how people will eventually see you. Alright, let's keep it going. So why is savings dead? Why is saving dead? Saving is dead because the annual percent yield that most bank gives is ridiculous, right? Absolutely ridiculous. So with that being the case, we're going to address that. Why is that completely dead, right? Most bank debt is ridiculous. I missed my S there, don't mind that. So let's see why the annual percent yield that most banks give is absolutely ridiculous. All right. Now, if I look at a number of banks in the US that offer the highest percent yield, let's take for instance this case right here, looking at the highest percent yield, you're going to have a situation here with some of the best banks: Hunts Bank, American Express, Marcus by Goldman Sachs. These guys are giving you 0.5% annual percent yield on your savings. This is absolutely ridiculous, right? You cannot make a living or make any progress in life by saving only. If you save and you don't invest, it almost don't make much sense in terms of what you're going to be achieving. You have to invest to be able to function, especially if you plan to retire comfortably. My goal is to retire in 10 years. That's my objective. And if I'm going to save, I will not be able to do that. I have to figure out a way to get the money rolling over. And I think the stock market is the perfect place to do this. Let's see why. the stock market is a better alternative than doing this. So let's take, for instance, now a particular stock, right? So let's do a particular stock. I want to show you, do a live demonstration how you do the basics. So let's use Yahoo Finance, and let's take Yahoo Finance. All right, so let's take Yahoo Finance, and Yahoo Finance right here is a nice place where you can search a number of stocks. Now again, we're not going to the technicality just yet, because here you have the SP 500, the Dow, the Nasdaq, and the Russell 2000. We don't need to know all of that yet. I'm going to break the game to you step by step, but we don't need to know that just yet. Think about it for argument's sake. Let's look at a stock. Let's look at NIO, one of the favorite stocks for this year that did so well. Now think about it for a minute. If we look at this stock is currently trading at $45.11. Now think about this stock for 1 minute. Let's look at it in terms of a year. Say for instance you purchased this stock in March 9th 2020, not so long ago, right? This stock was selling for $3.11. This stock is currently valued at $45.11. So it means, if I do my math correctly, if you divide 45.12 divided by 33.11, divide that, I'm getting 14.5. So it means then, if I put $1,000 in NIO a couple months ago in March, I would be sitting on about $14,000. If I put $1,000 in, I should say, I would be sitting on about $14,000. This is the power of investing. This is the power of investing. Now, I don't want to go into any technicality just yet. I just want to show you the basics, how you can actually change your life in a heartbeat if you do the proper research, if you find out what is happening with the stock, and if you understand the catalyst, what is moving the stock, and all of those things we're going to be addressing. But we don't want to dig into all of that yet. We just want to understand the basics in terms of how powerful investing is. Now, if you multiply your money by approximately 14 times in less than a year, there is absolutely no way you could save that. No bank or no other financial institution would actually be giving you that amount of money unless you are operating a business and your business is turning over money like that. So stocks to me is a no-brainer. If you spend the time to do the research, it's a complete no-brainer. So why do we need all of this stuff now? Why am I going through all of this? Because I think this knowledge is like a diamond in the rough. If you get the chance to actually learn this stuff, there's a lot of potential in terms of what you can actually earn. All right. Now, you might probably be saying to me, why do I need, isn't it difficult to find out which stock to buy and which stock you want to take on? Yes, it can be in some instances to identify, but there is so much news and so much information there, and I'm going to show you how to do this research to find out all of these basic things. Now, say for instance you don't want to invest in a specific stock, so you want to be lazy and you don't want to invest in a specific stock, and you invest in something like VOO. VOO we call an index fund. We're not going to dig into what an index fund is, but let's call VOO for an argument's sake. An index fund is simply a stock, right, or an ETF that actually tracked the SP 500, which means the top 500 companies within the US. Now, on an average, the stocks that track the SP 500 have given approximately 8 to 14% per year for the past 30 years. Now, say we calculate it at the lower, let's use it at 8%. If we do it at 8% over a time period, say for instance there, you don't want to be in a situation where, hey, I don't want to pick no stock, I want to just be able to put my money and just leave it. And you put it in an index fund, which is a collection of the top performing stock within the US. If I say put $300 a year, let's start with $300 a year. Let me use this simple calculator. $300 in, And say for instance, you put, let's do it to 30 years. And we're doing it in an index fund at about 8% over 30 years. And we calculate that over 30 years. Look at that. Over 30 years. And this is what blows my mind, why more people are not interested in things like this. If you invest $300 at 8% in an index fund, and we're going to dig into all of that, what an index fund is, what all of those fancy stuff is, you would get a total of $425,583 over 30 years. And I'm saying just $300 in an index fund. Now this is what blew my mind. There was this guy that I saw was actually working as a janitor, and he only put his money away in index fund. Didn't do any other job, didn't go to any other school to get any degree or anything. And this guy at age 55 of approximately $500,000 save up using the power of the stock market and the power of investing. So this is my hope, to get you motivated, to get you interested in want to learn these basic things and how to invest. So I'll see you in the next lesson. I hope